Hello everyone and welcome to another informative session on investments. My name is Shweta, a finance enthusiast and your next door friend, here to guide you on your path to becoming an everyday millionaire and achieving financial freedom. In our last session, we compared the different investment platforms like the fund managers, the brokerage accounts, self-managed platforms offered by a bank, and also your local financial institutions like Edward Jones or local advisors. We also looked at how to open a sample trading account by going through the Charles Schwab website. So in today's video, we will be covering the below topics: understanding what is a stock market index, look at the different indices out there, and then we will also be comparing ETFs, individual stocks, and mutual funds, which will be the different buckets in which you will be investing. So before we begin looking at the different choices and begin a path towards a financial freedom, it is important to understand the purpose of the stock market index and the different stock market indices out there. The index bunches a group of stocks together to give us a quick look at the overall health of the market or a specific sector. Experts choose a group of companies based on specific rules like the top 30, 100 or 500 companies in the US, and sometimes divided by the different sectors they represent, like the technology, the blue chip, or some other factors. So let's look at the three most known stock market indices out there. Firstly, the S&P 500, which is a group of 500 largest publicly traded companies in the US. We then have the Dow Jones Industrial Average, which is also called as a DJIA. It tracks 30 blue chip companies known to represent the US economy, and one of the oldest companies like Microsoft, the Apple, the Disney, and the Goldman Sachs. Then we have the technology and innovation companies like the Magnificent Seven, which is represented by the NASDAQ 100. So the ETFs, the mutual funds, and the stocks that you will be investing in will be a part of one of these indices. We have the Vanguard 500 Admiral Fund, which is basically a mirror, or it has all the stocks that is being tracked under the S&P 500. So now that we have looked at the different indices in the stock market, mainly the S&P 500, the NASDAQ Composite 100, and the Dow Jones Industrial Average, let's go ahead and compare all the different investment options that we have, mainly the ETFs, the mutual funds, and individual stocks. So before we begin investing, it's very important to know the distinction between an ETF, a stock, and a mutual fund. Now, both ETFs and mutual funds are pretty similar in the sense they both are a group of stocks that tracks an index like S&P 500. Whereas stocks, it represents a single company. Now, both ETFs and stocks can be traded on the stock exchange during the intraday hours or also sometimes during after hours, depending on the type of account you have. Whereas mutual funds can only be traded end of the day and through a fund manager. So you cannot go and sell your mutual fund or buy a mutual fund during the trading hours. It has to be done after hours, and it has to be done through the fund manager, unlike ETF or stock. So that flexibility is something that you lack in a mutual fund. You can buy a whole or a fractional part of an ETF just like a stock. Whereas even in mutual fund it can be done, but mutual fund is traded in dollars and not a number of shares. So many of the mutual fund has a minimum dollar investment of $1,000 or $3,000 as a required minimum. ETFs and stocks are passively managed. Stocks may be actively managed if you're going through a financial advisor, similarly with the ETF, but a mutual fund is always actively managed by a fund manager. That is what really decides the fee factor. So ETFs and stocks are basically no fees, or ETFs can be very low in fees. Stocks, you might have to pay the international tax if you're buying an international stock, but there are no fees associated. And now there are many mutual funds out there which are very low cost, pretty negligible fees. So mutual funds are quite comparable that way to an ETF. Now ETFs and mutual funds allow you to diversify your investment portfolio, and thereby it's a low risk type of an investment. And one more important thing to note is that mutual funds are purchased in dollars and not the number of shares, and hence it becomes the best choice for retirement funds, where you have the ability to invest a fixed dollar amount each month, like $500 or $1,000, and buy into a fund unit. You will also see that most of our 401k accounts are invested in mutual funds, which are typically owned by fund managers like Vanguard or Fidelity. So if you're still confused and not able to decide how to begin your investment journey or where to invest, then let's make that easier for you by summing up everything that we have seen so far. So stocks are for those who do not mind taking risks, knows how to analyze the financials of a company, has a decent investment budget, and is looking for an easy to liquidate option. Whereas ETFs are for the self-directed investor who doesn't mind taking a bit of risk, but at the same time is also looking at a diversified portfolio like a mutual fund without the high management fees and the minimum dollar requirement, and also the flexibility to trade on the exchange similar to stocks. For example, an ETF like a VOO or a SPY, that invests in S&P 500. And then mutual funds are mainly for those who would like to completely outsource the burden of investing to a fund manager, as well as for those looking at building a safe retirement nest egg. Similar to VOO or the SPY ETF, we have the Vanguard S&P 500 Admiral Fund that does pretty much the same and has a low expense ratio in comparison with most of the mutual funds out there. But it does require a minimum $3,000 of investment. So now that we have seen the different investment options like the ETFs, the mutual funds, and the individual stocks, I'm looking forward to hearing from you about your investment journey. And thank you for staying with me till the end. Please subscribe to my channel so I can bring more such content to you. And we will be talking about age-based investments in our next video. So please stay tuned. Thank you.